Hello, everybody. This is Jimmy with Credit Suite, filling in for Ty today. Um, Today, we are going to be covering cash flow financing, right? Very hot topic, very important topic. So let's talk about it. So there's some contact information. As always, we start here. So creditsuite.com/get funding. Good opportunity to look at that. Email us at info@creditsuite.com. You can call us at 877-600-2487. All right, so just kind of a quick recap. Last time we covered the secret no one will tell you about retail credit. What makes credit from merchants special and how you can best use it to build your business. So if you have not seen that, opportunity for you to go, you can find that video on YouTube. Why retail credit is a key component to building business credit. So a lot of good topics we covered on our last video. All right, so let's talk about fundability, cash flow, and your business. Fundability is going to be obviously the ability of a business to get funding. Kind of makes sense. It basically covers all the points that a lender or credit provider will be looking at. So when they're trying to figure out if you'll pay back a loan or the credit that's been extended to you. This is going to include details that you may not have thought about or you might think aren't so important. All right, so real 3 C's. You've heard it. If you haven't heard it, you're going to hear about it now. The 3 C's, capital acquisition formula. All right, so sometimes you have to think like a lender, right? Like if this was your money, would you lend it to who? Would you lend it to you? So when you think like a lender, you can understand that you just want to be sure that you can pay them back. This is business credit we're talking about. This is how it works in personal credit as well. So they're going to look at one of 3 things for a loan approval: cash flow, collateral, or credit, right? Credit, cash flow, collateral. That's going to be your 3 C's. So the more of the C's that you have, the more funding options that are available. So we're going to look at how cash flow can help you get business funding. All right, we've had videos about collateral and credit. Today, we're going to focus on cash flow. All right, cash flow financing. It's a loan. It's going to be made out to your company. It's backed by your company's extended cash flows. A company's cash flow is the amount of cash that flows in and out of the business, right? Usually within a specific period. So the last 6 months, the last year, the last 30 days. So cash flow financing or a cash flow loan is used to generate cash flow as a way to pay back the loan, right? So let's talk about some terms and qualifying for this cash flow financing. Much of the time, you will need to have a few years in business. You may need to meet certain minimum credit score requirements. You will need to provide historical cash flow, present your accounts receivables and accounts payables, so the lender can determine how much to loan your business. So they have a formula. They're going to look at all of these factors, your time in business. You need to have positive cash flow, good average daily balances in your bank account, because they want to see that you have the ability to be able to pay back the money that you borrow. And that's why they're looking at this. So bank statements, usually your last 6 months worth of business bank statements. And then, of course, accounts receivables and payables in some situations. All right, so let's talk about AR financing or account receivable financing. You can use outstanding account receivables as your collateral for business financing. So receivables should be with the government or another business. If you also have POs or purchase orders, you can get financing to have those filled. You will not need to use your cash flow to do so. You can get accounts receivable credit line with rates of less than 1% with no personal credit requirement. Okay. So accounts receivables is another form of your cash flow financing. Account receivable financing. Again, let's talk about some terms and qualifying. You're going to use your outstanding account receivables for financing. Get as much as 90% of your receivables advanced to you, less than 24 hours for funding. The rest of the accounts receivables are released once the invoice is paid in full. Okay. So factor rates as low as 1.33%. So here is that kind of broken down. 90% advanced to you upfront on an outstanding accounts receivable. You'll get funding for that in 24 hours. That 10% that's remaining, you'll get a percentage of that once that invoice has been paid to the company you've borrowed the money from, right? So when your client or customer pays that accounts receivable, when they pay that invoice, then that's when the rest of the balance is. This helps prevent cash flow issues. The purpose of the accounts receivables financing is to allow you to not have to float product or expenses or costs for a long period of time. So if you're set up where you're allowing your clients to pay you in a net 15 or net 30 or net 60 type of payout, if you do that a couple of times, cash flow can be an issue. This allows you to still have get paid on those accounts receivables even before your client pays, right? So it's a great product, really good for not for preventing cash flow issues. Some more terms and qualifying. So the terms are for credit suite account receivable financing. Collateral is going to be the account receivables. You can do up to $10 million with AR financing. So you can do up to 95% of receivables can be advanced within a week, starting at a prime rate of 2%. So only a 2% rate on your account receivables. That's really low, really good. So credit requirements, minimum 500 FICO score. Receivables must come from another business or government agency. So this is going to be B2B. This is not going to be coming from an individual, right? The business must be open for at least 1 year for you to qualify. So there's your time and business requirement. Medical receivables must have $1 million in annual sales or more. So your deal submission, we need an application, a breakdown of the existing receivables, and then, of course, the invoice. Let's talk about PO financing, purchase order financing. This is advanced to a business with a large purchase order or contract, but the business is unable to fulfill it, right? So you are unable to fulfill the order that your client has placed. So a lender will then loan you the funds necessary to complete that order and charges a percentage for the service. Now you can fulfill your order or contract. So the difference between a purchase order and accounts receivable, a purchase order financing involves a company lending you money to fulfill purchase orders. Accounts receivable financing involves a company buying your outstanding invoices, right? They're purchasing your outstanding invoices and giving you 90% of it up front. But they are both based on cash flow. Let's talk about some terms and qualifying for purchase order financing. So for approval, lenders will typically review your outstanding purchase orders that need to be filled. They want to be sure that the purchase orders are valid, right? So the suppliers that you're dealing with are credible. They want to make sure that your suppliers are credible. They want to make sure they're lending money to you to legitimately handle that purchase order. If so, then you can be approved, regardless of personal credit history. Your rates are going to be between 1% and 4%. In some instances, you can get 95% of your purchase order financed. Okay. Business revenue lending probably might be the most popular option. So this is a way to raise capital from investors who get a percentage of the enterprise's ongoing gross revenues in exchange for money invested. So in revenue-based financing investment, investors get a regular share of business income until a predetermined amount is paid. Often, The predetermined amount is a multiple of the principal investment, usually between 3 to 5 times the original amount invested. So this is, again, raising capital from investors, usually getting back 3 to 5 times the original amount they've invested. Terms and qualifying for business revenue lending. Since repayment of the loan is based on revenues, the time that it takes to repay the loan will fluctuate. The faster revenue grows, the quicker you'll repay the loan, and vice versa. The percentage of monthly revenues committed to repayment can be as high as 10%. Okay, so that would be something that you and the investor would agree on, is that amount, but they can be as high as 10% sometimes. So monthly payments will fluctuate with revenue highs and lows, and it will continue until you've paid back the loan in full of that agreed amount. More terms and qualifying. So all the terms are going to be for Credit Suite business revenue lending programs, right? These are our terms that we have with our lender. So collateral required. It's consistent revenue, verifiable through bank statements, right? So collateral is going to be proof of revenue through your business bank statements. Up to $500,000, so $5,000 to $500,000 in your loan amount. Terms going to be anywhere from 3 to 36 months, 3 months to 3 years for a term. 1.1 to 1.45 as far as a factor rate. Your credit requirements, 500 credit score or higher. So not a lot of requirement there. No recent bankruptcies. Let's continue the terms and qualifying. So your business must earn an annual revenue of $120,000 more per year. That is $10,000 per month if you break that down. You must be in business for at least 1 year. The business must do over 5 transactions each month. Okay, so that would be deposits. So if you have 1 deposit being made every week, then it's not going to qualify. You need to do more than 5 transactions a month. And again, more than $10,000 per month, 1 year time in business. So your financial services industries are prohibited. And then damaged credit is acceptable. So, or what you can do is your business is bringing in at least $15,000 per month instead of 10, and you can prove that you have 6 months time in business, right? So if you're doing around $10,000 per month, you need to have at least 1 year time in business. If you are doing $15,000 monthly, then you can actually have 6 months time in business and qualify, right? So simple application, your time of business 6 months, and then of course they will need to see copies of the business bank statements to prove the revenue is consistent. Let's talk about Fundbox. So Fundbox just wants to know about your cash flow when deciding whether to fund your business. Fundbox will connect directly to your online accounting software. That's all you need to do. You can get a line of credit through Fundbox, right? So same thing. They're going to review your last 6 to 12 months worth of business bank statements, and then they will make a offer for a business line of credit that you can qualify for. You can actually get up to $100,000. So Fundbox will actually auto debit your weekly payment from your bank account. Another reason why they're going to get access. They're actually going to automatically withdraw from your bank account. You do not need a minimum personal credit score, and you do not need to show a minimum time in business. Very simple there, fundbox.com. Good opportunity to get a business line of credit. All right, so you're going to pay that back in equal installments over the course of 12 to 24 weeks. Okay, so it is weekly payments taken out of your account. Available credit will replenish as you pay. So just like a line of credit, just like a credit card, once you pay down any kind of money owed, that available credit becomes available to you. There's no penalty to repay early. Your business must be based in the United States. You need to have a 600 personal FICO score and $100,000 in annual revenue. Put you right around that $8,000 to $9,000 monthly gross average. All right. Obviously, you'll need a business bank account. Ideally, they want to see 6 months time in business or more. You're having to provide bank statements anyway, so time in business will probably naturally be there. A PayPal working capital loan. You can get a loan from PayPal. You must already have a PayPal business account. Okay. It's not personally guaranteed. The loan amounts are and eligibility depend on your sales via PayPal. So applying won't result in a credit check. You go to paypal.com/working capital. Let's talk about some terms of qualifying for PayPal. All right, so a maximum loan amount depends on your PayPal account history. To be eligible, you must have a PayPal Premier or business account for 90 days or more. You need to process at least $20,000 in annual PayPal sales if you have a Premier account, or at least $15,000 in annual PayPal sales if you have a business PayPal account. And pay off any existing PayPal working capital loan. They do not allow you to have two different loans. You must pay back or pay off any current existing PayPal loan. All right, so since automatic repayments get deducted as a percentage of each PayPal sale, the amount that you repay each day will change with your sales volume. The more you sell, the more repayment progress you'll make that day. On days without sales, you'll make no payments. There is a minimum repayment requirement every 90 days. So depending on the loan term that you choose, you're going to pay at least 5% or 10% of your total loan amount. It's a loan plus the fixed fee. That's every 90 days. The 5% minimum applies to loans that are estimated to take 12 months or more to be repaid. So it's based on your business's past PayPal sales and other factors. Again, proof of being able to pay that back. They're not going to put you in a position where they don't feel like you can afford to pay back the money that they lend. So they're going to look at all of those numbers, the revenue, the bank statements, and that will determine the percentage and then, of course, the term to pay that back. They're not going to put you in a position where you cannot afford it. The 10% minimum applies to loans estimated to be repaid within 12 months. Square, another popular option. So you can actually get loans through Square. So applying will not affect your personal credit score. Loan eligibility is based on a variety of factors that's related to your business, including its repayment processing volume, account history, and payment frequency. So squareup.com/capital will be a good place to start for Square. You're going to get anywhere from $300,000 up to $250,000. So you can get a customized offer based on your card sales through Square. Then choose your loan size. You're going to pay no interest. It's just an ongoing flat fee. There are no ongoing interest charges. So instead, you're going to pay one fixed loan fee to borrow the loan. The fixed fee is the difference between the total owed amount and the initial loan amount. The fixed fee will never change, regardless of how quickly or slowly the loan is paid. It is automatically deducted until your loan is fully repaid. So if sales are up one day, you pay more. If you have a slow day, you pay less. A minimum of 1/18 of the initial balance must be repaid every 60 days. So they do have a minimum every 60 days to pay back a certain amount. They do not require collateral for business loans of $75,000 or less. For loan amounts over $75,000, they're going to take a security interest in your business assets. Then they will file a UCC statement with the Secretary of State where your business is organized. It's not personally guaranteed. All right, so let's recap some of this stuff. So there are a number of options for business funding that depend on your cash flow. Some are available through Credit Suite. There are also online options, such as through PayPal and Square. You can contact us today for help with your options. If you'd like more information, please see the description. Easily and quickly get financing. So continue this recap. So you get access to every legitimate funding program in one place. You never pay us any fees. You can use your loan volume to get lower rates and fees. A business blueprint to graduate to even SBA loans. Never look for funding again. 877-600-2487. Info@creditsuite.com. Again, is a good place to start. creditsuite.com/live-27 is where you can actually grab your free business financing guide. Thank you so much.